Before every major economic collapse, something strange happens. Not overnight, not with headlines, not with panic in the streets. A group simply fades. Not the rich, not the poor. The middle class. History shows this again and again. Rome, Germany, Britain, America. Different centuries, different systems, same outcome. The middle class doesn't collapse after the economy falls. It collapses first, and by the time most people notice, the damage is already irreversible. Today, we're going to examine why the middle class always disappears before economic collapse, and why this pattern never changes. The middle class is more than income. It represents stability, trust in institutions, and long-term planning. Middle-class households save money, they buy homes, they invest in education, they believe the system will reward patience and discipline. This belief is critical, because when a financial system begins to fail, it doesn't attack everyone equally. It targets the group most dependent on stability, the middle class. Let's go back nearly 2,000 years. At its height, the Roman Empire had a thriving middle class, small landowners, merchants, skilled workers, and retired soldiers. But Rome was expensive to maintain. Endless wars, massive bureaucracy, growing military costs. Taxes increased, productivity slowed. So the government chose an easier solution. They debased the currency. Silver coins were quietly diluted with cheaper metals. On paper, nothing changed. In reality, purchasing power collapsed. The wealthy shifted into land and assets. The poor had nothing to lose. But the middle class? Their savings eroded silently. By the time Rome fell militarily, the middle class was already gone. Now, jump forward to Germany after World War I. The country was economically broken. Reparations were enormous. Government debt exploded. To survive, the state printed money. At first, inflation was manageable. People were reassured. This is temporary. Middle-class families kept their savings in banks. They trusted pensions. They followed the rules. Then inflation accelerated. Prices doubled, then tripled, then spiraled out of control. A lifetime of savings could no longer buy a loaf of bread. The rich owned real assets. The poor were already poor. The middle class lost everything. This collapse didn't just destroy wealth, it destroyed trust, and that vacuum reshaped German society for decades. The reason the middle class is always hit first is structural. The middle class holds wealth in cash, pensions, and bank deposits. It relies on salaries rather than assets. It trusts long-term promises. When inflation rises, interest stays low. When taxes increase, middle incomes absorb the impact. When systems break, protection comes last. Governments don't eliminate costs, they shift them, and those costs almost always land on the middle class. Today doesn't look like the past. There are no wheelbarrows of cash, no overnight hyperinflation. But look closer. Housing prices soar beyond income growth. Education requires decades of debt. Healthcare consumes savings. Inflation quietly outpaces wages. The middle class still works, still earns, still pays taxes, but it no longer builds wealth. This is the most dangerous stage, when survival replaces progress. Collapse doesn't always arrive with noise. Sometimes it arrives as exhaustion. There is one sentence history warns us about. This time is different. Romans believed it. German professionals believed it. Modern workers believe it. Every collapsing system convinces its middle class to wait just a little longer, and waiting is expensive, because once confidence breaks, recovery becomes impossible. Markets can rise even as societies weaken. Technology can advance while purchasing power shrinks. Employment can remain high while stability disappears. By the time the collapse becomes visible, the middle class has already lost its leverage. What remains is polarization, extreme wealth, and widespread insecurity. History shows no exceptions. This isn't a prediction, it's a pattern. Economic collapse doesn't begin with stock crashes. It begins when the middle class realizes the system no longer works for them. When trust breaks, institutions follow. History whispers first, then it repeats itself loudly. The question isn't if this pattern will appear again, it's whether people will recognize it in time. Every empire believed its middle class was permanent. None of them were. This video is for educational purposes only and does not constitute financial advice.